drop? The drop, right? The drops. All right, YouTube. It looks like we are live. Um, just waiting to see myself here on the other end, and we'll go ahead and get started. So, what a day it's been today. There we go. What a day it's been today on the markets, guys. This is Mark coming at you guys from TRADEPRO Academy headquarters here in Toronto, Ontario, on this rainy day, let's call it. It's rainy and windy here in Toronto. We had 30 °C temperature yesterday. Today we're at 11 °C with some nice wind. And I guess that's what we got to look forward to for the remainder of the year. Weather's not going to be getting any prettier, so that's all right. Looks like volatility is kicking back in. So in in exchange for poopier weather, we're going to get some volatility. I'll make that trade any day of the week. You too? Yeah. You too. Awesome. All right, guys. So here we are. It is Thursday, October the 3rd, 2019. Time's around 12 p.m. Eastern Time. And let's go ahead and get started with this update. Good afternoon, Craig. Let's go ahead and get started here. We've got a couple of key data releases that came out this morning, and a couple of squawks that came through as well. Let me just make this a little bit more compact so I just see what's going on today. Apply settings. All right, awesome. And so today is Tuesday. Perfect. So Georgie covered some of the stuff that came through overnight. The main driver was basically the fact that the US has imposed retaliatory tariffs on EU aircraft and agricultural and industrial goods, and these are expected to come into effect on October, I believe it was the 18th. So on top of the US-China trade war, we've got another one, and we kind of mentioned this yesterday, that it might fly under the radar a little bit. We had mentioned on this update yesterday that the WTO, the World Trade Organization, has given the US the go-ahead to put on retaliatory tariffs to the tune of 7.5 billion. And the US did not take their time with that. They went right ahead and submitted that request, and they imposed those tariffs on EU aircraft and agricultural goods. So a couple things that we did see come out of this overnight. We had France's Finance Minister Le Maire. He reiterated that US sanctions against the EU is an economic and a political mistake, and that the EU could retaliate. So on top of what we got with China, we've got what's looking like somewhat of a trade war developing here with the European Union. Which is also not the best for markets. That's adding in a little bit more uncertainty in the markets, and traders don't really like uncertainty. And that's what we're seeing at this point in time. So we did dump a little bit yesterday, and we did have some morning weakness today. However, we did V-bottom pretty much at the 2856s. In fact, our low of the day was the 55s, from which we've recovered quite nicely back above the US session open and the previous day close. So nice little bullish recovery on that front. And that likely has to do with the FOMC funds rate, the probability, which was at 77% yesterday, the probability of a hike. 1 week ago, it was at 49.2%, the probability of, not a hike, sorry guys, of a rate cut. That probability increased to 77% yesterday, and as of October 3rd at 10:55 Central Time, that 77% has increased to 90.3%. That likely being a result of the recent ISM manufacturing numbers. We did have a big manufacturing miss on, was it Monday? No, it was Tuesday. Tuesday, big manufacturing miss, 47.8 versus 50.4. Anything under 50 generally indicates contraction, and that's showing the economy slowly starting to slow down. And today's ISM non-manufacturing PMI report came through and it's still indicating expansion, came in above 50, but it came in lower than expected. Expected was 56 point, or sorry, previous was 56.4, expected was 55.1, and we missed at 52.6, which was the newest low, or rather the lowest reading since August 2016. All right, so US economy starting to show a little bit of weakness vis-a-vis those ISM manufacturing and the ISM non-manufacturing index reports. So that's what we had on that front. We had out of the US initial jobless claims, 219,000 versus 215 expected. Continuous claims, 1.651 million versus 1.654 million expected. As mentioned yesterday, we did have Feds Evans speak overnight at around 3 a.m. Feds Evans is a dove and a voter, and basically, quick one-liner summary from that was that he mentioned two recent rate cuts by Fed were appropriate, but will be open-minded in case adjustment is needed. And so that's not really surprising coming from a dove. What else did we have? President Trump. President Trump came up and mentioned that if China doesn't do what we want, we have lots of options regarding China. We'll be talking next week. China should start investigation into Biden's. So if you guys have been living under a rock, there's been a bit of a investigation into the Bidens through Ukraine, and now kind of have a similar situation with China, and Trump is kind of putting the pressure on China to start this investigation. And this tweet was basically with regards to that. If China doesn't do what we want, we have lots of options regarding China. Again, kind of pointing towards options being tariffs, at least the way I see it. And finally, we did have natural gas inventories today. Not a real big driver for the markets that we follow, but I figured it's important enough to let you guys know. So indicated range was 105 to 107 billion cubic feet. We came in at plus 112 billion cubic feet. So a bit of a bigger build than expected, which is bearish. And I don't really follow natural gas, so I'm not too sure where it's at right now, but not much of a move on crude on the back of that. So that's where we're at the current part of the day. And let me see if there's anything else on the agenda. Nothing really else on the agenda other than FOMC member Clarida speaking, and is due to speak at the economy about the economy and monetary policy at an event hosted by Wall Street Journal. This is going to be in New York, and audience questions are expected. All right, so Feds Evans is, sorry, not Evans, Feds member Clarida is a voting member from September 2018 till January 2022. And so whatever they got to say is going to be pretty important. So make sure to keep an eye on that. After market is closed, that could affect the Globex session. However, for the remainder of the cash session, not really much on the agenda here. All right, so that's what we've got on that front. We've covered some of the overnight drivers. We've covered some of the US drivers. You guys know what to look forward to on the back of a news and fundamental front. Let's switch over to the charts here and show you guys what these markets are doing. Let me pull this sucker up. There we go. But before we do that, I wanted to show you guys this little thing that I was explaining a little bit earlier with regards to the Fed's Fund Watch. So this is the Fed Watch tool. I'm going to give it a second till I see it up on the screen, and I'll kind of explain from there. So what this is basically showing you the target rate probabilities for the October 30th meeting, right? So this is the probability on this axis and the target rate on this axis. So for them to keep it, this is what it's looking like at the moment. For them to drop it, rather cut rates, this is what the basis points would look like here. All right, so 25 basis point drop would keep us right around here, and that probability is up to 90.3. You guys can see here 1 month ago this was at 63%. A week ago it was at 49.2. Yesterday it was at 77%, and now this was based on 10:50 October 3rd, 10:50 Central Time. Not too sure what that is in Toronto, but it's at 90.3% right now, guys. So these odds have significantly increased over the last 2 days, and that's likely a result of this news or this economic data coming through showing weaker than expected, rather weaker than forecasted numbers. And this is leading traders and investors to believe that, based off of this data, Fed is going to have no choice but to cut rates again. and that's what we're showing here. So that's likely, there was no real actual squawks to come through to tell us why the S&P 500 just V-bottomed like this, right? However, what we do know is that that manufacturing data came out around 10 o'clock. And if you look at the timing, 10 or so after that data came out, we started to get a little bit of a climb come through. So likely result of traders um, increasing the likelihood or increasing the probabilities of a rate cut is why we're starting to see that, because the market tends to, especially the stock market, they like the idea of rate cuts because rate cuts mean cheaper money to borrow, and cheaper money to borrow means you can borrow it for cheap, buy back into your company, and go from there. All right, that's been a big driver of the stock market gains since 2008, company buybacks. And cheaper borrowing costs give access to cheaper money, and companies can go back in, buy their own stocks, stock buybacks, and continue to propel this thing to fresh highs. All right, so nice little recovery there. We're honestly looking for a little bit more downside, but that downside did not come through. All right, so let's take a look at the quote board. What is our quote board showing us? Well, the quote board is showing us that we're finally getting volume coming back in. This is starting to look like regular market volatility. Back at 1.4 million contracts on the session at around 12 p.m. This is exactly where we should be. And based on this kind of volume, you're starting to see nice directional moves. There are volatile swings, but that's where we make the money. We make the money in the swings and in volatility. And as you guys can see from my charts here, your S&P 500 is on the right-hand side. Yes, if you're looking at it from where we opened to where we're at right now, basically it looks like we haven't done much, but you can see there was some nice trending moves, giving you a lot of opportunity on both sides of the market today. So this is what day traders live for. This is a kind of volatility that we live for. Excuse me. And this is where we tend to do very well. Right, so let's take a look at the quote board again. 1.4 million contracts, higher than average. Your daily change percentage is up 0.48%. We are above the previous day close here at the 83 halves, and we are above the open, which was 83 3/4. This open is the U.S. session open from 9:30, so we are above both the previous day close and the U.S. session open. So from a strict, technical point of view, being above previous day close and being above open suggests bullishness, right? And so we're kind of sitting at the 5-day point of control right now. This big yellow line above the other yellow line, that is the volume profile where the most amount of transactions have been made over the last 5 sessions. And it's no real surprise we're kind of consolidating that level at the moment. Crude oil on the left-hand side, we opened up at 52.47. Previous day close came in at 52.50. Last traded price is 52.17. So we are down what is that? 0.85%. And again, we are below previous day close. We are below the open. So technically this is bearish. However, structure starting to suggest we are seeing some bulls starting to come in. Overall, still macro on the bear side. This thing's just looking more like a counter trend rotation out for me. So that's what our quote board shows. If we look at our pivot charts here, let's see if this works for me. No, that did not work for me. Control Alt X. No, that's not working. All right, that's fine. Let's do this so I can increase it here. All right, so this is what the pivot chart looks like for crude, and what you guys will see, same thing happening until it doesn't. You're getting fresh lows coming in, rotations, fresh lows, rotations, fresh lows, rotations. This is what we were talking about yesterday. We were saying a move between the S1 to the pivot is still going to keep a lower high and continue for downside. We held that S1 overnight. You guys can see that here. And we've cut to a fresh low. Come into this fresh low, and surprise, surprise, what are we doing now that we've cut through that fresh low? We are rotating back up, and the trend remains in place, lower highs and lower lows coming through here. So until that trend stops, we're going to look to continue shorting. And so at the pivot right now. If we get back above the pivot, that's kind of the line in the sand for the bears to defend. If we get back above that, we might get a bit of a deeper pull up higher. However, as long as we stay below those 53s, I think sell side's going to come through. We are at this moment rotating right back up to that previous support level, right around these 15s or so that held before that breakdown. So that should act as a first level of resistance. If it doesn't, we can pop back up into the pivot. But if this thing is going to continue to the downside aggressively, we should see this level here hold. Right, so that's what I'm seeing on the crude oil chart. And also what I'm doing is looking at the tick chart here now. All right, so you guys will see yesterday, big consolidation kind of coming in between these 52.80s and these 52.15s. You guys can see we broke down below that during US session today, kind of rotated it a bit, pumped to fresh lows right at 51, and since there just kind of recovered right back up at the VWAPs. Right, and we got our opening right here, overnight low, previous day low, VWAP, all kind of hanging around this level. We did sell off from here. We are back into it. I could see this as a potential level where we double top, and then we kind of try pressing back down to the 51.70s and potentially back down to the 51.20s. That's kind of the way that I'll be playing this. Crude oil, even better if it gets back below that VWAP, kind of hold rotations, you can look to sell it back down. That's kind of the play I'll be looking for. I'm not really looking to buy this thing, like I said, until it gets back above this region here. If we get back above that, you're seeing volume node, very low volume node in here. Higher volume nodes are in there. So if we get back up there, we can see a quick price movement, since this just signifies that there wasn't much volume done in that region. Those tend to be quick moves into the next big level of volume. All right, so that's where we're at right now. Still looking for downside on crude, back above 53. Downside is a little bit overextended, and we'll likely get some buy stops coming through. On S&P 500, let's open this title up. S&P 500, again, nice big sell-off yesterday. We've kind of neutralized both sides of the range here. Even though trend remains bearish, we did peak below these 70s, and we rotated right back up to the top of the range. We have held a pivot right around this 29.01, and so this is kind of the level that I'm looking for buyers, or rather for sellers, to defend. The fact that we kind of dipped below here and then came back out to the top of the range and we failed that as well, that kind of looks to me like we got shorts stuck in here. We got their stocks or stops puked as the market rallied higher. We got some new longs excited up here, and now they're kind of in heat, feeling the pain as the market's rotating lower. So I think from here, as long as we hold below that pivot, we'll likely make a move back down towards those 60s. That's just what I'm seeing on the higher time frame. Is that what's going to happen? Doesn't necessarily mean that's going to be the case, but let's take a look at the actual tick chart here. So off of the open, we were kind of sat between a range in these 28.96s and 28.76s, so 10-point range from Globex session. We opened up right in the middle of that range, and we kind of puked that range early into the morning, right around 10 a.m. Flush below the previous day lows, got as low as these 55s, and from there, kind of just straight press on higher. Took out a lot of resistance that was in this region. You guys are seeing previous day low, overnight low, opening range low, opens, 5-day point of control, opening range high. A lot of stuff was broken through here. And so that should be acting as support on the way down. You guys can see we did pop our heads back above that level. We've since dumped below it back into 5-day POC, retested that overnight high, which is holding at this point. And so if we get a flush back below these lows, we'll likely make another effort back towards these 28.76s, just back towards the other side of the range, at which point, buyers can start stepping in here and press this thing up higher. So as long as we hold below this overnight high at this point in time, I think we'll have a move back down towards these previous day lows. See if we can test these that little range here that caused that rally. All right, so that's what I got on the spoos for you guys. Hi, all my views. All right, cool. So that's what I got for you guys today. Let me pull up the Trade Pro Performance Index for you as well, since that should be somewhere over here. And then we can wrap this sucker up. All right, any questions for me? If you guys have any questions, go ahead and pop those into the interactive chat. Um, all right, here's our index. All right, all right. Here we are. So there is the Trade Pro Performance Index. These are the results from today's session. Not as directional as the last 2 days, but still overall, team did quite well. 69.81% live positive. That number is 54.72% up, 15% flat, and then 30% were down on the session. So our average at all-time highs at this point in time, 78.75%. We're going to look to keep it above 70%. That's going to be our goal for October. Um, Granted, we have no control over this, but if we can do it, that'll be awesome. That'll be the first month that we get over 70% on average. All right, so starting off strong in October, volatility's really picked up these first 3 days of October, and we're generally seeing a lot of geopolitical tension vis-a-vis, the U.S.-China trade war, now this new U.S.-Euro Union trade war that's kind of happening, and yeah, that's basically it. So that's what we got for you guys today. Don't see any questions in the chat, so I'm going to take it as I've covered what you guys want to see. And based on that, I'll flip the camera back over towards myself and we'll sign this off. Thoughts on tomorrow's non-farm payroll. Thoughts on tomorrow's non-farm payroll. Don't really have many thoughts on it. Georgie kind of covered it yesterday quite well, with the sense that they've they've set a pretty low barrier. Let me just double check what the expectation is here. Yeah, so the previous one was revised lower, and it's 140,000 new jobs added for the non-farm employment change. The labor data comes through, and there's three numbers. It's the average hourly earnings, the non-farm employment change, and the employment rate. The non-farm employment change is the one that gets all the headlines. That's the sexy one that all traders follow, but it consists of all three, right? So as far as non-farm employment change, I'm not really expecting too much. I would expect these numbers to start increasing as we come into December season. That's typically when you get seasonal staff starting to join the workforce for the Christmas season, right? And so I anticipate it to get a little bit better into December, but at this point of time, I'm not really anticipating too much, to be quite honest. If I had a gun to my head and I had to guess, I'll probably say that it's gonna be a miss tomorrow. It's not a very high number to beat, and that's generally how it works. Is um, like Georgie said, they set these expectations based on these forecasts, and this forecast isn't set very high, so it's like a high jump that you've literally got to take a step over to get on, and so that's what the anticipation is. If it misses that, that's going to be really really bearish, and it's going to build towards the potential of a rate cut coming in at the end of October. So what you should be doing is watching those numbers as they come through. If the numbers come through worse than expected, that's likely going to probably result in a rally in the S&P 500 because, like I said, over even the last day, the probability of a rate cut has increased from 77% to 90%. All right, so another number that's showing weakness in the economy is likely going to have traders um, increasing those probabilities even higher. And, like I said at the beginning of this, if the Fed does cut the rates, stocks will usually rally on the back of that kind of news. Yeah, exactly, Dimix. Is it Dimix, Dimix? That's exactly it. So we were covering it earlier, and you guys can see, it was 49%, 49% likely. Was it 49? Yeah, 49.2% was the probability of a rate cut last week, September 26th, guys. That was Friday. Or sorry, yeah, that was Friday. Right? That was Friday. We had ISM manufacturing PMI numbers come out on Tuesday. That was the 1st of October, and the probabilities jumped up to 77% from 49.2 on the back of that report. And this morning we had another ISM non-manufacturing PMI come through with lowest number since August 2016, and that 77% likelihood jumped up to 90.3. So yeah, the numbers dynamics are supporting what you're saying. Craig, what is the tick size that you have for the S&P? On both of these markets, Craig, I have a 10 tick range bar set up. All right, so this is not my day trading setup. This is just a setup I use for YouTube. My actual day trading setup has a couple of other charts and stuff that we use. But this 10 tick basically is my roadmap. This is what I look for to set my levels, give me a general idea of where we are within the trend, and then we drop down to lower ticks and then onto the footprints. All right, so you're getting a partial picture of the pie, but that's what you get for free 99. All right, so that's all the questions. It seems like that is all the questions that have come through. Yeah, Will, performance index is looking good. And that has nothing to do with us. That has everything to do with you guys. You guys are absolutely smashing it. Just seeing some of the numbers in the room, like some of the comments coming through with regards to some of the positions you guys are taking, and your patience. Your patience too is really awesome. I've been doing this for just under 2 years, trading futures full time, and I'm still working on patience. That's the thing that I need to work on to get me to the next level, and to see some of the guys in the room just smashing it, and some of the trades that they're taking. It's absolutely awesome to see. Right, so that is me on today's date. Again, this was October 3rd. Hope you guys enjoyed this one. And I'm really looking forward to you guys, absolutely smashing this in the room with us. We do have NFP. We are trading NFP tomorrow. So this is one of the benefits of being in the elite room. I guess I have you guys for another moment. And the other gentleman stepped out of the office. So I will take this as an opportunity to give you guys a little behind the scenes sneak peek of what you can get as part of the elite package. So let me share my screen once again and take you guys through a quick little walkthrough. Let's get the screen back up. Okay, so what are we at in terms of this actual update so far? 25 minutes. All right, not bad. All right, guys, so this is our elite dashboard. This is what you get if you sign up with us. This is the elite program. And one of the benefits of being in the elite room, one of the things that we do for our traders is we give you guys access to a whole bunch of market coverage. All right, so part of the elite trading room, what this is basically a 24 hours. It's open 24 hours, 5 days a week. And what our team does is anytime that we have events that are outside our normal hours of operation, our normal hours of operation for the morning room is 9 a.m. Eastern Time, EST, until around 11:30 a.m. Eastern Time or so. Right? So those are the normal operational hours for the day trading room. If we have any news events that come out outside of those hours, such as NFP tomorrow, which releases at 8:30 a.m., or FOMC, which comes out usually around 2 p.m. Eastern Time, we will jump into the elite room. All right, so we have elite trading room. We have that open. Anytime there's any market moving events such as NFP, such as FOMC, we jump in there and trade those with you guys. And on top of that, we also do have market coverage from that 11:30 till around 12:15, 12:30. So extended hours into the European close. And we also do have David out of Hawaii. He leads the London room. So we also have commentary and moderation happening at 3 a.m. to 5 a.m. Eastern time for our folks over in the West and over across the pond in Europe, Africa, Asia, etc. All right, so that's what the Elite Trading Room looks like. It's one of the added benefits of being part of the Elite. You guys see here, we've got a lot of cool stuff for you guys. But I don't know if you guys want to see this or not. So let me know if you guys do want to see that. I can go ahead and do this maybe on tomorrow's update. But we are coming into 30 minutes or so. So just in the interest of keeping this at a respectable time, if there's enough interest, I can by all means do this tomorrow. All right, so that's basically what I got for you guys. Hope you guys enjoyed that little session here. We will be back on tomorrow morning, or rather, yeah, tomorrow morning and tomorrow afternoon, and we're going to be trading with the Elite team at 8:15 a.m. I believe we're opening the room. So Elite Trade Pros, if you guys are in here watching this, you guys know to sign in at 8:15. Outside of that, YouTube. If you guys are not part of the Elite Room, I do highly suggest you guys give us a quick gander. We do have a 14-day 100% money back guarantee. So if you haven't already got enough value from these YouTube videos, you can sorry, if you're finding that you're getting value from these YouTube videos, it's a risk-free next step to jump into Elite. Give us a shot. We've got a 14-day 100% money back guarantee, which means that if you sign up and you take part in the day trading room, you look through the courses, and it's something that you don't think is a good fit for you, within 14 days you can cancel. You'll get 100% of your money back, guaranteed. No questions, no BS, none of that stuff. We only want to work with people that want to work with us. If you sign up and you find, you don't, it's not a good fit, not your style, nothing like that. There's no love lost, no hurt feelings. Business is business. And yeah, we'll leave it at that. So if you're going to be trading into the remainder of today's session, you know your 3 rules: patience, diligence, and discipline. Until tomorrow, guys, good luck and good trading. Bye.